The Bitcoin arms race is accelerating institutions, governments, and the future of scarcity. The cryptocurrency landscape has entered an unprecedented period of institutional and government interest, transforming Bitcoin from a niche asset to a cornerstone of global financial strategies. In recent weeks, Bitcoin accumulation has reached a fever pitch, fueled by growing reports of national reserves, institutional hoarding, and a growing recognition of Bitcoin's scarcity status. This article delves into these developments, providing in-depth analysis and expert insight into their long-term implications. Strategic Reserve Announcement: U.S. sparks a scramble. Global Bitcoin: U.S. government's plan for a strategic Bitcoin reserve. The announcement that the United States may establish a strategic Bitcoin reserve has sent shockwaves through financial markets. Reports suggest the government aims to buy 1 million Bitcoins over 5 years, which equates to 200,000 Bitcoins per year. However, there is a glaring problem. There aren't enough Bitcoins left. Bitcoin's liquidity supply crisis. Estimates from on-chain analytics platforms suggest that only 700,000 to 900,000 Bitcoins remain in liquid circulation. The rest are locked up in long-term holdings, lost wallets, or have been distributed to institutional funds and treasuries. The math is simple. If the U.S. government were to undertake such a massive buyout, it would need to compete directly with private entities and other countries in a limited market. Institutional buying fever, MicroStrategy and Marathon Digital lead the way. MicroStrategy's record-breaking purchases. MicroStrategy, a pioneer in institutional Bitcoin adoption, continues to accumulate Bitcoin at an astonishing rate. The company has consistently leveraged debt instruments to purchase the asset, demonstrating its strong belief in its long-term value. These moves have made MicroStrategy one of the largest holders of Bitcoin. Similarly, Marathon Digital raised $1 billion through a convertible bond, stating that a portion of the proceeds would be used to purchase Bitcoin. With over 33,000 Bitcoin already in its treasury, Marathon Digital exemplifies the growing trend of companies converting their cash reserves into Bitcoin holdings to hedge against inflation and fiat currency devaluation. The U.S. Strategic Reserve Plan has created a domino effect, driving institutions and governments around the world to increase their purchases of Bitcoin. The logic is clear. Bitcoin owners own the future of wealth and financial stability. Each new entrant in this arms race exacerbates the scarcity problem, driving demand and prices even higher. Hyper-Bitcoinization, the road to a Bitcoin-dominant economy. What is hyper-Bitcoinization? Hyper-Bitcoinization refers to the point at which Bitcoin becomes the dominant global monetary standard, replacing or working alongside traditional fiat currencies. The road to hyper-Bitcoinization is driven by 1. Limited supply. Bitcoin's 21 million market cap makes it deflationary, essentially increasing in value over time. 2. Decentralization. Bitcoin is not subject to centralized manipulation, appealing to nations and institutions seeking financial sovereignty. 3. Adoption drivers. As more and more entities adopt Bitcoin, the network effect accelerates, making it indispensable. The impact of scarcity on wealth distribution. One of the defining characteristics of Bitcoin is its scarcity. When lost and long-held coins are taken into account, the available supply is dwindling, leaving less than 13 million Bitcoins that are realistically accessible. There are over 56 million millionaires globally. If distributed evenly, each millionaire could only own 0.23 Bitcoin. This fact underscores the urgency among wealthy individuals and institutions to secure as much Bitcoin as possible before it becomes too expensive. Institutional adoption. Corporations join the Bitcoin economy. Acrox Pharmaceuticals recently announced its adoption of Bitcoin as part of its treasury strategy. The company has allocated $1 million to buy Bitcoin, citing Bitcoin's inflation-proofing and long-term scarcity as the main reasons. Why corporations are turning to Bitcoin. Corporate adoption of Bitcoin is no longer an anomaly but a growing trend. Businesses are realizing that holding their cash reserves in fiat currency exposes them to inflation risks. Bitcoin offers a solution. Inflation hedge. Unlike fiat currency, Bitcoin cannot be devalued through money printing. A global store of value. Bitcoin's growing adoption cements its status as digital gold, ETF revolution, liquidity and mainstream access. Bitcoin ETFs, unlocking institutional demand. The approval of Bitcoin ETFs, especially in the United States, has created an accessible path for institutional investors. BlackRock's iShares Bitcoin ETF broke records with nearly $2 billion in trading volume on its first day, highlighting the huge demand for regulated Bitcoin exposure. Grayscale's expansion. Grayscale, another prominent firm, recently announced plans to introduce options trading for its Bitcoin ETFs. The move aims to 1. Increase liquidity. Options trading introduces hedging mechanisms that help stabilize the market. 2. Attract new investors. Sophisticated financial instruments attract more institutional participants. The ETF boom is expected to further integrate Bitcoin into mainstream finance, with analysts predicting daily trading volumes to rival traditional fiat currencies within the next decade. Scarcity and its ripple effects. Million-dollar Bitcoin. Bitcoin's scarcity ensures that as adoption increases, so will its price. Predicting Bitcoin reaching $1 million or more per coin is no longer a speculative dream, but a realistic outcome based on current accumulation trends. Wealth gap. As Bitcoin's price increases, ownership becomes less accessible to the average individual. Bitcoin's concentration among wealthy institutions and entities will likely exacerbate existing wealth inequality unless proactive measures are taken to promote broader adoption. Why action is urgent? The window of opportunity to accumulate Bitcoin is rapidly closing. For individuals and small investors, the current institutional buying phase represents a critical turning point. As prices rise and supply decreases, the barrier to entry will only increase. Key takeaways for investors. 1. Start now. Delaying action could mean missing out on meaningful Bitcoin ownership altogether. 2. Think long-term. Bitcoin's trajectory favors patient, long-term holders over short-term speculators. 3. Diversify wisely. While Bitcoin dominates, other cryptocurrencies also offer significant opportunities. The future of finance. Bitcoin's place in a changing world. Bitcoin's rise is part of a larger transformation in global finance. The concepts of money, store of value, and financial sovereignty are being redefined in real time. Decentralized finance. DeFi innovations in DeFi will complement Bitcoin's role, enabling new financial services. Tokenization. Real-world assets like real estate and commodities are increasingly being tokenized, expanding the cryptocurrency ecosystem. The race to the future. Bitcoin is no longer a speculative asset. It is the foundation of an emerging global financial system. Actions by governments, institutions, and corporations underscore its importance as a store of value and a tool for economic strategy. For those who understand its potential, the message is clear. Act decisively, think long-term, and prepare for a future where Bitcoin is at the center of global finance. The race is on. Those who act now will shape the financial landscape of tomorrow.